What is up, guys? Today I'm going to be teaching you how I do my top-down analysis every single morning and how I get ready to trade, kinda. What gets me, how I figure out my draw and liquidity, and just the things of that nature. So if you enjoy this video, join my Discord. It's free and link in the description. Every day you'll see me do my top-down analysis live, every single day live for free. 8:30 a.m. Eastern time to like 11 a.m. Eastern time. Also, please subscribe and like this video if you enjoyed it. I really appreciate all the support. Thank you guys so much. Thank you so much for 700 subscribers. Now let's get into the video. So let's start off with, we'll do NASDAQ. So first things first, I mean higher to lower time frames. It's true when people, the higher time frames hold higher power. So I mean overall, what is this? Oops. I don't know what that was. But overall, so like hypothetically, how do we want to do this? So if I was looking at the market right now, I'd be like, okay, we're in a daily fair value gap. A little bearish about that. But why would I not be too bearish about this? Because we've already tapped it twice. One tap, two tap, and now we're a third tap. Now, how strong is that fair value gap going to be a third time? That's what you don't know. But for say we'll go into today. So today we have this daily fair value gap, right? Oops. I don't have a daily preset, so I'll just write daily in there. So what is this fair value gap? Ask yourself. It's a bearish fair value gap. Okay, so that's one bearish thing, one bearish thing. What is the daily structure? Bearish. Two bearish things. Okay, and then I go to the 4 hour and I look, I say, okay, let me just see if I can rewind time. We'll go here. So this is what I'm looking at. I'm like, okay, we're in the daily time frame, you know. We've respected the weekly imbalance or the weekly opening gap, whatever you want to call it. We've also swept internal, you know. We have a lot of room to the downside still. We still have all this levels all the way over here. So I'm like, okay, I'm looking. I'm like, okay, 4 hour, you know, we kind of broke structure to the downside on the 4 hour. We'll call this, you know, market shift. Okay, we have a big imbalance up here, so we'll probably come back and rebalance. Most likely come back to premium of this sell-off range, you know, before looking to come back lower. So I'm watching that, and then I'm going to go to the hourly. So first off, in the 4 hour, what does this structure tell you right here? This is bearish structure. You see you have internal liquidity swept and your higher time frame PD array. If you don't know what a higher time frame PD array is, check out my other video. I made a video on that Tuesday. So our higher time frame PD array is the daily or weekly imbalance. We have liquidity swept, internal liquidity swept. We have huge displacement down through both recent lows, closure below, market structure shift, never really any heavy buying pressure overall. Also, what else are we looking at? We also are in discount of this overall sell-off range from what? The July 31st. So we are in discount of the range we sold off in the last week. So now, I'm taking account of all this. What do I think price is going to do? I'm thinking, you know, price is probably going to, you know, go like bang, 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 whatever in there to then go lower. So let's zoom in even more. This is just right now. All right, we've sold off a lot. You know, we have a high right here, internal high inside of this. See, like the thing is so cool is price is very fractal. So like we rebalance on the higher time frame, but we still need to rebalance on the lower time frame. So you kind of have like a breaker block here, a breaker block like here. So I assume price is probably going to reject around here. You know, you have some liquidity resting in here. You can mark out the real imbalances, which is that one and this one. Okay, now I'm kind of curious to this area. I think price is probably going to come back. You know, hourly we're starting to buy up a little bit. Let's see. Oh, come up. We almost tapped. We basically tapped that first one. We're starting to see rejection. So hypothetically, say I'm looking at the charts now. You know, we came up a little bit and now we're starting to see selling pressure down. At this point, how do you know if we're going to keep going up or we're going to start going down? There's one way to tell right now, and I want to know if you can see it. You have a bullish fair value gap right here. So this is your key. This is a very important part. If this fair value gap gets ran through, we're going to go revisit this low. If this fair value gap gets respected, we're going to go higher. Let's see what happens. So it looks like it's a tough one. We kind of respected it. There was an inverse here. That's a tough one. Let's see where the real imbalance was. So looking at the 15-minute, what you see here is, you would zoom in even more. You see sell side liquidity taken. inside of that, and you're seeing displacement up. So you think we're going to go higher. That's how you judge that fair value gap right there. Okay, so now looking at price right here. So this is still on the 50-minute time frame. This is way too high for me. I personally am a 1-minute guy, but price is fractal, so it doesn't really matter. So where do you think price is going to go now? Well, you know, we sold off. We took this low right here. This isn't necessarily a prominent low. What else did we also do? We also rebalanced into, you know, equilibrium of this buy up range. You know, the 15 minutes buying up. We have market structure shift here. Not even more of like a breaker structure. You know, but what's going to determine which where's price going to go? This 15-minute fair value gap. Now, it's the same exact thing. If we respect this, we're expecting to revisit these two, this high at least, and probably this high. If we disrespect it, we're expecting to visit this low. So you just have to keep zooming in until you get to the time frame. So now I'm going to go to the 5-minute, see what structure is doing inside there. Well, you see, okay, we came up. This is a clean sweep. We have a really clean market maker buy model here. We'll probably revisit here. You know, you have a decent standard deviation move down here. Where's the line up with here? I haven't seen price action play out, but I'm probably going to assume that we could buy here and have this like this, and it should play out. It does not play out. That happens. Why though? You may ask, why did that not play out? I'll give you the honest answer here. The reason for that, oh, it took me all the way back. The reason for that, so look what price did. Price came back down and then came up and then skyrocketed. So it's like kind of what, it just depends. But why did price just blitz this fair value gap? Well, price blitzed the fair value gap because it's Asia or London session. Price isn't going to be that probable in London session. So I wouldn't trade that necessarily. Let's see if I can show you an example from today's session. Where's today? Thursday. Right here. So overall, watching this, you know, you're zooming out. You're starting to see we're buying up. We're buying up. You know, we have a big news candle, and you're looking at internal structure. So as I said before, overall, I'm very bearish. Why? Because we're at discount of this range. We have recently taken this level up here. Also, today, there was a SMT at this high. So you have an SMT at this high. It's really just about what is being respected and what is being disrespected at the time you're going to take a trade. So me personally, I don't trade London session NAS because it's not me. I live in America. I'm not waking up at 3 a.m. to trade that. It's me personally. It's U.S. stocks or U.S. indices, so it's definitely going to move better during the U.S. time frame. Now, you may ask, what could you have traded today? Okay, I'll show you today. So going with all those things that I said earlier, I'm very bearish. Why? Because we sold off heavy. We're tapping into that daily fair value gap. We structure is very. I mean, I can zoom out and look. Overall, we're inside a 4-hour fair value gap right here. Structure's bearish on the hourly. Not a lot of buying pressure here. Not seeing much, kind of in a consolidation range, not knowing if we're going to go higher or come back down. We come up, we are in this hourly fair value up here, which is also discount of this range while we're in discount of this range. So now it's double discount on top of each other. So let's get rid of all this real quick, clear up my screen for you guys. Okay. So this is going into this morning. So we have this SMT here. We're in an hourly fair value gap. I'm not really buying this. I kind of see this as not like necessarily market structure shift, but more of just like a news candle because that's what it was. So now you go to the 5-minute. You're watching. I think this was another SMT right here. I want to be honest with you guys, so I really want to. Yep, look. Right here we have an SMT with on top of that big SMT. So what is that? That's the double SMT. So if you have two bearish SMTs, where do you think price is going to go? Just ask yourself this question. You have two bearish SMTs. Do you think price is going to go higher? No. Why would price go higher if there's two bearish SMTs? That makes no sense. So you get these double SMTs here, and you kind of can watch a couple of things. You're going to know really how far you're going to go down. Is what you don't know is because you have this huge sell up right there. but you do know you're going to go down a little bit, especially once you disrespect this bullish fair value gap right here. So this is when you're on like the 1 minute, and you're like, okay, where should I target price? Well, we have all these lows right here. You know, you have a low here, count this low. There's a lot of stuff in this video for you guys. Equal lows here. Even I wouldn't count this low. I wouldn't count that low. So you have this clear early beginning consolidation. You have double SMT at the top. You have clear sell down. You come back up because this is a 5-minute fair value gap. Why you're asking why is price rejecting in this area? Price is rejecting in this area because it's a 5-minute imbalance. You finally sell off again, confirming that you're going to run this 5-minute imbalance. You could enter off of the touch of the imbalance with your high, you know, here or here, probably here, because you have no reason for price to go higher. And then I would only target these lows right here. I don't think there's nothing else for you to target there. So aligning the overall draw with me being very bearish. See, the thing that matters is, okay, yeah, this is my draw on liquidity for right now, and it gets hit. Now, am I wrong because price skyrocketed today? No. Why? Because price skyrocketed from 950 to 16. I don't care about that. That's out of my range. I'm not zooming in here looking for an entry. Like, oh, I could have entered because this closed with this inverse, you know. Then I could go long and, you know, oh my gosh, I could enter here on the retouch of the inverse actually to have better RR. And then, oh, where would you put your stops at? Oh, I'm going to put my stops, you know, below that. And then I'm going to, you know, what would I have targeted? Oh, I'm going to target buy side of this range. So, and a lot of people have this problem. So you're telling me you're going to go on a 1-minute entry from just a inverse closure and target a daily buy side or a 4-hour buy side? You're not. You're really not. You're not helping yourself at all when you trade like this. When you see big moves in the market and you zoom in and try to find your entry, it just isn't your entry. Now, it's okay to go back test and look at things, but looking at this, I mean, this is all right. I mean, it's just a rebalance to this news candle and then buy up. But is it enough to take it all the way up to here? No. Okay, let me show you guys one more thing. There's a big difference between so this trade right here, you would have entered at 951 and your take profit wouldn't have got hit till 15:59. What is that? That's 4 o'clock. That is a 7-hour trade. It would take 7 hours to hit your take profit. Now, compared to if you actually followed your bias and actually followed your draw on liquidity, your trade here would have been hit in approximately, let me check, 1, 2, 3, 4, 5, 6. 6 minutes. 6 minutes and 7 hours. Huge difference there. Okay, so what is the basic of this video? If you guys are here still, what is being disrespected and respected from daily down? Time is fractal, the stock market is fractal. What you see on the daily, you can also find on the 1 minute. So you want to keep compounding the daily to the 4-hour, to the 1 hour, to the 50-minute, to the 5-minute, to the 1 minute. And then when you get to the 1 minute, you want to see the exact same thing you're seeing on the daily. I can show you guys right now. You see this right here? This kind of looks like this. That kind of looks like that in a way, you know. You have the original consolidation, you know, you have your manipulation down and then the redistribution. It's the same thing. If I covered up the time on the screen, you'd have no idea if this was the 1 minute, the 1 hour, the 4 hour, the daily, the weekly. That's all I have for you guys. Like I said, if you enjoyed this video, please like and subscribe. Also, join my free Discord link in the description. Thank you guys so much.